It is no longer news that the COVID-19 dealt a huge blow to everything and everyone. This huge blow had the most impact in the economy of countries. China's economy is slowing down as it adapts to its zero-COVID strategy and a weakened global demand. It's normal to ask, how's the second largest economy in the world feeling the worst wrath of COVID-19 and economic backtrack? Well, according to reports and recent news, not so good. In today's video, we will be discussing recent happenings and how badly they could hurt China. Let's go. Companies from Japan, the United States, and other nations are accelerating their moves to shift production out of China to lessen the risk of disruption in their supply chains due to abrupt changes in Chinese government policy and turmoil following the spread of COVID-19. China is losing more manufacturing and export market share in key sectors to Asian neighbors, with recent zero-COVID policies a significant factor leading to further erosion in its long-time dominance of global trade. According to data shared with CNBC by transport economics firm MDS Transmodel, China has lost ground in key consumer categories, including clothing and accessories, footwear, furniture, and travel goods, while also seeing declines in its share of exports from minerals to office technology. The Chinese administration led by President Xi Jinping is increasingly wary, as the growth of the country's economy will be affected if the foundation of the world's factory is shaken. What happened with Apple? The company's key supplier announced major factory investments in Vietnam in a move to diversify its supply chain. Apple supplier Foxconn announced the creation of a major new factory in Vietnam and a $300 million investment to expand its current operations in the country. The decision comes as Apple attempts to move parts of its manufacturing process out of China. The new factory will sit on 111 acres just outside of Saigon, with Foxconn signing a 35-year lease worth approximately $62.5 million. The new factory will possibly make MacBooks a first for the country that already produces AirPods, Apple Watches, and iPads. Apple told suppliers late last year to plan for a shift in manufacturing out of China and into emerging markets such as India and Vietnam, according to the Wall Street Journal. The company cited supply chain tie-ups, riots at Foxconn's Zhengzhou factory, and China's extreme COVID-19 restrictions as reasons for the move. Earlier this month, Apple announced it had missed earnings expectations in the last fiscal quarter, posting the largest quarterly revenue decline in over 5 years and the first year-over-year sales decline since 2019. CEO Tim Cook blamed the general macroeconomic environment as well as specific production issues in China affecting the production of the iPhone 14. The bad and the ugly. In response to pandemic-induced supply chain issues and slowed economic growth, American companies have been leaving China and reshoring their production to the United States. Reshoring or onshoring presents a solution to high transportation costs, long lead times, and geopolitical instability. By reshoring their manufacturing processes, companies can reduce costs and respond more readily to customer demand. They also lower the risk of supply disruptions, increase control over the manufacturing process, and improve proximity to the end market. Why are U.S. companies considering reshoring? Successfully reshoring requires a strategic approach. While it's easy to decide to reshore due to the state of current events, companies should also consider the long-term implications of reshoring. For many companies, the long-term benefits outweigh the initial costs. U.S. companies have increasingly been reshoring in recent years due to several key reasons. Number 1. Reduced lead time. Lead time is the time from when an order is placed to when it is received. Long lead times can be a major problem for businesses as they can miss out on opportunities and incur extra costs. By reshoring production, companies can reduce lead time significantly. There is no need to ship goods from overseas, and production can be closer to the end customer. Reshoring allows companies to bypass border inspections, shipment transfers, shipping delays due to miscommunication, language barriers, and time zone differences. In addition, reshoring can help companies make changes more quickly in response to consumer demand and other market conditions. Number 2. Fewer import tariffs. Another reason U.S. companies are reshoring is the increasing cost of imports. The initial reason why companies moved overseas, low labor costs, low tariffs, no longer apply. Due to higher tariffs, rising transportation costs, and currency fluctuations, imported goods have become more expensive, making reshoring an attractive alternative. It's also becoming increasingly hard to do business in China due to things like increased regulation and rising labor costs. The ongoing trade war between the US and China and the UK leaving the European Union are several factors that have led to higher tariffs on imported goods. Number 3. Political climate. The political climate between the US and China has also contributed to the trend of reshoring manufacturing operations. The two governments' opposing viewpoints on how economies and people are governed, as well as US-imposed tariffs on Chinese imports during the Trump administration, have made it increasingly difficult for American manufacturers to continue operations in China. The Biden administration continues to criticize Chinese economic policies, adding to tensions between the two countries competing to be the #1 economy in the world. What steps has China taken to remedy the situation? End of zero-COVID policy. There has been a notable manufacturing shift away from China for about 10 years now, amid rising labor costs and increasing strikes. These moves were accelerated further with the decoupling from China under the US administration led by President Donald Trump from 2017 to 2021, during which high tariffs were imposed on Chinese goods. In recent years, the Chinese government's request for foreign companies to transfer their technologies and its heavy-handed zero-COVID policy to thoroughly contain infections of the novel coronavirus have also been major factors behind such withdrawals. The government decided last December to lift its zero-COVID policy, fulfilling the demands of foreign companies that place importance on the stable operation of their factories. Because the shift was abrupt, however, it was perceived by economists as a reaffirmation of the risks associated with the uncertainty over the Xi administration's policy changes. Settling with Apple. China is pulling out all the stops to keep multinationals like Apple and its supplier Foxconn in the country. Such efforts to attract foreign investment come as the pandemic and geopolitical tensions push companies to diversify their supply chains away from China. After such a drop in sentiment, China is working hard to keep foreign businesses investing and supporting domestic growth. The Commerce Ministry said that for the first time, it would launch events for an Invest in China year. In a sign of how hard local governments are trying to attract foreign dollars, top officials from Henan province in central China personally welcomed Foxconn chairman Yang Lui during his visit to his company's factory there, the province announced. Foxconn operates the world's largest iPhone manufacturing facility in Henan's capital, Zhengzhou. The party secretaries of both Zhengzhou City and Henan province met with Foxconn, along with the mayor and governor, state media said. In China, the ruling Chinese Communist Party takes the lead in decision-making, and such high-level participation in the meeting with Foxconn indicates any matters discussed can be implemented more quickly. During a COVID outbreak and subsequent lockdown last year, Foxconn factory in Zhengzhou became a hotspot of attention when some of its roughly 200,000 workers decided to leave and walk home. Apple later said Zhengzhou factory disruptions would delay deliveries of some iPhone 14 models. China ended its stringent COVID controls in December. By February, Foxconn's Zhengzhou factory was producing at full capacity, with staff working 2 shifts to meet high client demand, factory manager Wang Zhu told local media. Foxconn confirmed its chairman visited Henan and planned to collaborate with the local government on projects, but the company did not share details on those investment plans or whether they have any intention to shift production out of China. China is eager to play up how other multinationals are interested in local business opportunities, especially now that international borders have reopened. Senior executives from Apple, Pfizer, and Mercedes-Benz are among those wanting to visit China to discuss business, the Ministry of Commerce spokesman said at a press conference. The spokesperson noted there are dozens of multinational corporations talking to the ministry about such high-level visits. Mercedes-Benz confirmed to CNBC its CEO Ola Källenius is planning to visit China. Pfizer had no comment. Apple did not respond to a request for comment. Overseas marketing tour. China is also visiting potential investors in their home countries. After a top government meeting in December called for greater efforts to attract foreign capital, many government-led groups have traveled abroad to make sales pitches for China. Wang Jingjia, deputy director of Shanghai, an economic development zone in Shenzhen, led a group to Dubai, Singapore, and London in February to drum up investment interest. He described the visits as achieving remarkable results, but did not elaborate. He also noted serious challenges to attracting foreign investment. Those include unfair competition with local players in China due to industrial policies, lack of legal protection for foreign business in China, and geopolitical risks, Wang said. We have come to the end of today's video. Do you think this is the beginning of the end of China's troubles? What else do you think can be done to rectify the issue? Would you invest in China if you were in charge of a multinational company? Share your thoughts with us in the comment section. Hit that subscribe button and do well to tap the bell icon so you can get notification about our next mind-blowing video. See you in the next video. Bye.